Hey guys, this is Chris here. So weekly trade recap where I'm going to be covering the trades that I had taken for the week. So for those of you who don't know, in the trading masterclass, I share my trades for the first several hours of every session with my members. Usually I'm trading up till New York lunch, maybe a little bit longer. And when I'm doing that, I'm sharing my trades with all my members. And so we're going to recap some of these trades that I had shared with my members. There were a lot of trades this week. I didn't actually trade on Monday. I traded on Tuesday, Wednesday, Thursday, and Friday. So even for 4 days, we had a lot of trades. I'm not going to share with you every single trade because this could be an hour-long video. But I'm going to share with you some of the highlights. I'm going to share with you the wins, and I'm going to share with you all my losses that I traded for this week, how I traded, how I was managing it, and how I profited or lost money on these trades. So let's go ahead and jump into the first one here. So this first one is BBY, Best Buy. We had bought a put fly on this one here at 120, 115, 110. So this was on Tuesday. That was the first day we started trading for the week. We were off on Monday, and we paid 142 for that. This is just additional commentary. So let's look at the Best Buy chart. Okay, so what was happening was Best Buy was rolling into this kind of resistance zone, which you can kind of see between here and all the way up to the 125 big round number there. And as we were getting close to this, we felt like this was the 22nd. That was the Monday we were off. We started trading on this day. And we felt like after this push right here that Best Buy was going to start rolling over a little bit. So instead of shorting the stock outright, we decided to actually trade a put fly on this. A put fly is very straightforward. We bought the 120, 115, 110. So basically what we do with a put fly 120, 115, 110 is that you buy the 120 puts, you sell double the amount of the 115s, and then you buy an equal amount of your original 120 puts. So it all balances out to a delta neutral position. And what we're basically looking for is the market to close as close to this strike as possible. Now these were weekly contracts, so it was expiring on the 26th. So we were kind of hoping that by the 26th it would kind of roll into here and close right in that for max profit. So looking at the 1 hour chart, this is the open of the 23rd. And so we had this kind of, prior high here, corrected pullback here, impulsive rip through it, stalls towards the end of the session, and then it just opens, pops up, and then sells off aggressively. So we sold this. As soon as it got below this, that's when we went long the put fly on this one here. And it kind of consolidated for a little bit. And then on the next day, it opened much lower. So we'll get into this. We ended up closing it a couple days later. So I will share with you exactly where we closed it out and how much profit we made on that. Also on Tuesday morning, we traded HOTH. There was a positive news catalyst. We had really good volume out of the gate, a little bit of corrective pullback, but then it started to kind of challenge VWAP here. And we felt like it was curling up. And so once it had cleared this kind of resistance here, we felt like it was going to break through this and then make its way all the way to at least 350. So we longed HOTH at 299, even though it was right in front of a big round number of $3. We feel like the momentum was pretty strong and that it should give us a move to at least 350, maybe $4. There was a really strong buyer that come in around for 18K, and then right after that immediately another 9.5K buyer. And so it was a short-term play. We're targeting 355 roughly, and our initial stop was 284. What ended up happening is this ended up hitting our stop loss. We had trailed our stop loss as the thing moved up towards 387. But what happened is basically we got in on the break of this candle here. And initially the trade went nicely in our favor. Little resistance here, but everything looked good on the level 2 and the time in sales. Same thing here. Dipped a little bit, popped higher. We were all feeling pretty good about this, on the 5-minute chart. But then it started to run into kind of this hidden seller here around 320, 330. There was like a hidden seller that just kept popping in, and they kept just selling it. It just couldn't get past it, 1 minute, 2 minute, 3 minutes. And then literally in the last minute of this 5-minute candle, that seller came with a pretty large order and slammed it back down. We had trailed our stop up at this point to about, 287 or something like that, right around here. So it stopped us out for about 12 cents on this one here. So I took a loss on this one here. 12 cents, not a major loss or anything like that. Quick in and out, move on to the next one. So the next trade here was actually, we had bought, I mistyped this here. It was a bear put spread. So when you buy a bear put spread, you're buying it, not selling it. So we had bought a bear put spread for 320, 315. It was the weekly expiry. So it was expiring the end of the week. So theta was constantly working against us. We paid 193 for that. For those of you who don't know how option contracts work, if it's priced at 193, Each option contract represents 100 shares. So if we had bought one option contract, that'd be $193. 10 options contract, that'd be $1,930. 100 options contract, $19,300. So looking at the chart on this one here, basically this is the 22nd here. And we were coming into resistance and there was just a lot of heavy option positioning at 320. And we felt like, it stalled on the 22nd here. Did find VWAP, bounced a little bit. But then, early on in the session, so this is the 23rd right here, it bounces off of VWAP, pops higher, but then it just keeps struggling. And as we were reading the tape and looking at options position, we felt like, this is just not going to make it to this kind of 324 area or anything like that. We felt like it was going to start to roll over. So it did. It started to roll over and we felt like, okay, this is going to break down. This is going to flush. And so we bought the 320 and we sold the 315. So basically we wanted this to go down to 315. If it had closed at 315 by the end of the week, we would have collected max profit. Although since we were long the 320 and short the 315, we were losing theta on the 320 every single day. So we kind of wanted a quick move to 315. We ended up closing this a little late in the day. We'll share that trade with you shortly, but we had some other trades before we had closed the QQQs out, which was Roblox. Roblox has been a very interesting trade for us. We felt really good about the IPO. We bought the IPO around 64. Then we bought it like 67, 69. We bought quite a lot on Roblox. So we've been actively trading it. We had taken off some of our position as it started to pull back on our initial position. And then we had re-added at 70, and I think we even re-added at 75. So when it started to pull back, we had trimmed off a majority of our position, but we also bought some more at around 75 again. So Roblox here on the 23rd had fallen massively, and we had closed our initial, some of our initial covered calls on Roblox. So when Roblox opened for the IPO, it wasn't a few days. I think it was like Tuesday or Wednesday the following week that it started to, they started to produce options on Roblox. And once they started to come out, there was a huge volatility premium on Roblox. So we had 90 calls on this, 90 strike calls for April, and they were selling at a massive premium. And so we had decided to close some of these out for profit. We had sold them for $246 and we closed them out at $145. So it's $1.01 profit on those per contract. And so again, in terms of option pricing, one contract would have been $101, 10 contracts, $1,000, 100 contracts, $10,000. So we closed this. And then because the volatility was still pretty high on these, we closed our 90s and we rolled up and reloaded some more on the 80 strike for the April expiry, which is the 16th. So we got those for about $2. Now we're going to come back to the Roblox trade shortly because we ended up closing that one out for a loss. The next one on our list is DKNG. So DKNG, we felt like DKNG was kind of building for like a breakout. So we really like this, impulsive corrective, impulsive rip, making new highs at 74. And then it kind of drifted back and we felt like as long as it didn't make it to here or lower and it made a higher low, then we felt that we'd want to re-enter the position. So it was making higher high and higher lows. And it did that. It did this. It popped above the weekly VWAP. And so, we felt like, okay, it's stabilizing, it's building. So we ended up buying around 69.30, right around here. And we felt like, okay, nice impulsive corrective, bounce, rip up. And so we felt like this was probably going to reattack this, build a higher low, and then continue to build higher. And so it did do that. It produced a higher low here, re-tagged these highs, and then started to sell back. But then it failed at these highs here, and then it started to roll over here. And so we felt like this was probably going to start to lose ground. So once we got to like 69.70, 60, it was like 69.78 or something like that. We closed our DKNG long position. So we closed it. We only ended up making a 45C profit on the remaining position of that. I was kind of bummed because it was, all the way up to 74. And so I felt like it was building, but then it just really started to roll over. A lot of tech started to roll over. A lot of things that had been strong for a while were just rolling over. And so we started to also sell our covered calls on this one here. We closed our covered calls for 80 on the position that we had there. We made 79-cent profit on that one there. And we closed our 85 strikes. We had a fair amount of cover calls on DKNG. So we closed our 80 and 85s. We had originally sold the 85s for $275, closed them at $245 for 30-cent profit. So we felt like DKNG was rolling over. And if we had kept the calls without the underlying stock, we would have had unprotected calls on this one, and I just didn't want to leave them unprotected on there. So I just closed and flattened everything out. Minor profit on the stock trade, minor profit on the options themselves. Okay, so getting back to our Qs, we closed this one later in the day. So we opened them early in the day and we closed them later in the day. I didn't make as much profit on this one as I'd really wanted to, but I didn't really feel like holding them because theta was going to eat into about 40 cents per contract on this one here per day. And so I was kind of hoping that we'd roll down to 315 within the day. Since it was expiring that Friday and I had bought the bear put spread on a Tuesday, each day theta was working against me. That means I'd be making less and less and less potential profit on each day. So going back to the Q chart here, this is where we got short right around here, and we bought the 320 puts and sold the 315 puts. And what ended up happening is it did roll as we suspected, but it didn't quite make it as much as we had wanted to. And so we felt like instead of letting this thing continually eat into us, theta having to hold it overnight, we closed towards the end of the session. So minor profit on this one, not as much I wanted to. I wanted to capture at least 50% of the profit on the option contract. That's kind of what I was kind of gunning for at a minimum. We just didn't get enough on that. The next day it did end up rolling over, but if we had held this to the end of the week, we probably would have lost some money on this because our theta would have decayed all of our long puts a lot more than our short puts at 315. So the contract, we probably wouldn't have made much more profit on if we had kept it. But I definitely did close this a little bit early. I could have waited for this to, see if it's going to treat all this and the weekly VWAP as resistance. And it did. The next day it opened. This is the opening candle. Went right into the weekly VWAP and then sold off aggressively. Short rally real quick and then just kept selling off. So I definitely didn't make as much on this one as I could have. I was planning on being in and out within the same day unless it showed a lot of promise for another rollover, but it wasn't looking as strong as I was. I probably closed it a little bit too early on this one here. Could have been patient because the dynamic support in the VWAP had turned to resistance below this. We just hadn't had any tests of it. So I didn't really know if it was going to hold or not. I probably jumped the gun on this one here and got out a little bit too early and definitely missed some profit potential on this one. Okay, going back to our BBY long put fly. So we had closed that one the next day. So we bought it for $1.42. We closed it for 2.5. I don't know where my math was on this one. My math brain was clearly off. That's not a 73-cent profit. That is a $1.08 profit. Okay, so back to our BBY trade here. This pretty much did exactly what we expected. Once it started to break below this, we felt like it was rolling over. So again, on the long put fly, we had bought the 120 puts, so double the amount of the 115, and then had long puts on the 110 here. So basically what we wanted is we'd want the market to close as close to 115 as possible. It did exactly what we thought once it rolled over. It rolled over. This is an impulsive sell-off. This is a corrective move, treating the VWAP as resistance, and then sold off even further. So as you can see, this candle is the open on the 24th. That means it basically opened, went up to VWAP, rejected, and then sold off aggressively. And then it started to bounce a little bit. And so with the high gamma on that move, because it moves so much so fast, we felt like, hey, this got pretty close to our 115 and one big flush. Let's take profit on this one here. Let's just close it out. We had already had a lot of long put flies already open. We had a put fly in Etsy. We had a put fly in Zoom. All those we closed for profit. And we were wanting to just unwind some of our put flies on this here. We closed it at 250. We originally bought for 142. So that's a 108 profit on this one here. It did end up rolling lower the rest of the day. And so we definitely could have captured a little bit more profit. But the next day it just ripped. And if we had held this through the next day, we would have lost some of the theta profits on our long puts at 120. If we had held it through Thursday, we would have made less profits on this one here. So overall, I feel like we did pretty good on this one, getting a $1.08 profit on a $1.42 contract. I feel like our timing was really good. I feel like we read the wall pretty well on this one here that just couldn't get past. Overall, I think this was a pretty solid play. Okay, so getting back to the Roblox position, we had a pop on Thursday. It had pretty much gone to the IPO low, and we thought it was actually going to break down, and it ended up skyrocketing. A pretty large buyer came in. So we closed half of our remaining position on Roblox. At this point, our Roblox position was about a quarter the original size. So we closed half of our remaining quarter of the position. So we only had 1/8 of the position now left open. We took an $8 loss on this one here. I was kind of bummed on this one here. I really did not expect Roblox to be so bearish and retest the IPO lows. But as we noted here, we had sold a lot of covered calls on this and taken profit on that and other options on this. So overall, the net profit on this one is decent, but not as much as it would be if Roblox had really kind of maintained at least a $70 price or higher. So took an $8 loss on this one. This one kind of stung, but you adjust, you manage, you cut your losses, and you move on. So looking at the chart on Roblox here, once it kind of had made this new high here and then came all the way back down, we felt like, okay, there's a decent support in this area here. We had noticed that this bounce off of 67 was pretty weak. In fact, it was treating the weekly VWAP as resistance. That was not what we expected. We expected it to kind of make its way back here at least make its way back to 75 and then show that we're kind of holding this upper range, this kind of wide range, but it didn't. It had a much lower high. You can see right here, much lower high, lower than this one, lower than this one, lower than this one. And we felt like, uh-oh, this is not really panning out as much as we had wanted to. So it got into here. The next day it opens, rips. And so we're like, okay, this is, becoming problematic. We felt like, hey, our catastrophic stop loss is below the IPL lows. We ended up getting a large institutional buyer in this one here at 60. I think it was like just above 60. And it's popped it really nice since then. So take advantage of this pop. Once we got above VWAP, we felt like, okay, let's close our 75, half of our remaining 75 longs. It's about 1/8 of our original position. So we took an $8 loss on this part of the position, ended up screaming higher, a little bit of rip, and now it's higher. So we're feeling a little bit better about our remaining position at this point. But we felt like, hey, let's take advantage of this here. It cuts our loss majorly. And so let's get out, thin the position, and just trade smaller size than this until we feel like it stabilizes and builds back a more defined structure and range. So again, a little bit of a stinger, but I feel like there's chance, we've already made some money. We closed a lot of money on our original longs at 64, 67, 71. And so overall we're net profit on Roblox, but that $8 loss definitely hurt. Okay, and this is one of our last trades that we had shared with our members for the week. We did an HD call ratio spread Home Depot. We're very bullish on Home Depot for this year, and we've been wanting to add a lot more leaps. So basically long-term option plays on this. And we want to be holding some Home Depot exposure through the rest of the year. So we sold a call ratio spread for 300, 320 for the January 2022 expiry for $699 credit. So again, if you do the numbers, one option contract, $699, 10 option contracts, $6,900, 100 option contracts, $69,000. So that's how that credit worked out. Break even on this trade is 347. So it would have to close above 347 for us to actually lose money on this trade. But let's look at the chart and show you why I'm bullish on HT. So let's look at the daily here. Okay, so Home Depot had a very nice corrective structure here. They've been holding for a long time. This is August 2020. So it's been stuck between 295 roughly, or 292, and 260, 257 for, almost 6 months now. Then we had a false break, and it kind of treated the lows as resistance. We had this false break and then sell off. But zooming into this here, so here's your break treated as resistance, double tap, sell lower. False break, it just started immediate buying, and it was just a lot of it. This is just consistent buying. And got back up here, and it's been a one-way train since then. So going back to the daily, we felt like, hey, if this starts clearing the 293 highs on this one here, then we want to get long. We did after it cleared through it. We felt like it might make a little bit more of a pullback to say 290, right around here, and it just wasn't doing it. It just kept ripping higher and higher and higher. So here we are on the 25th. As you can see, there's a breakout forming here, and I think we pretty much bought on this candle right here on the breakout. So we did a 300, 320 call ratio spread. For those of you who don't know how a call ratio spread works, you're basically buying X amount of calls at 300, and then you're trading a ratio proportion on the 320 strikes. So you could do like, you buy 10 contracts here and sell 20 here. That would be a 1-to-2 call ratio. If we had sold 30 at 320, that'd be a 1-to-3. You can do 1-to-4. It's a ratio of calls to puts on this one here. And so we're long calls at the 300, and we have short calls at 320. Now, the way the profit potential works out on this is, so if this is the strike price going this way, and this is like 300, and this is the 320 calls, and this is like break even, because we sold it for a credit, we sold it for a net credit of $699. The trade's automatically in profit. Once it heads up to 320, we can actually make more profit on this trade. After 320, those calls start to lose value, and our break even point is 347 on this one. So Home Depot would have to close past 347 to us to lose money on this. If it closes around 320, we'll end up making about 4 times, I think it's roughly 4 times the $699 credit on this one here. So Home Depot, if you're listening, close your stock price at 320 at the end of the year. Now, what ended up happening is it rallied on the Thursday, and then it also rallied on the Friday and closed near the highs. And so we had originally wanted the 330 strike for the calls that we were going to sell, but there wasn't any volume available on. We just kept trying and pushing the order, and the order just kept getting rejected. It wasn't getting filled at all. So on the next day, the 330s, there was pretty good volume on then. We closed out our 320 calls at a minor loss, like $1 or $2 loss on that one there. And then we rolled those into the 330 for about the exact same amount of credit that we had gotten on the 320s. Because the price had moved up, the 330 calls became more valuable. And so we basically swapped them out for almost an even credit. And other than that, we just had to take a minor loss on the 320 calls. So if Home Depot just kind of tanks this year, we still keep a nice credit on this one here. But now our profit profile has changed. So we have the 300 that we're long. Now we're out to a 330 strike on this one here. And it basically puts our break even at 365. So Home Depot would have to gain another 20% on the year. Here's the break even. And so it's like this now. And so Home Depot would have to close basically above 365 for us to lose money on this one here. But here's the beauty of this trade. Anywhere along the line, if this keeps going and going and going, we feel like, hey, this might close well above 330. And if we feel like, hey, this may close well above 330, this gives us a chance to buy enough of the underlying to neutralize the remaining delta on the covered calls. And so then instead of the profit potential going like this, it would basically start to flatten out or even increase a little bit. And so if we end up buying, anywhere between 300 and 330 and it closes above 330, then we end up making a really nice profit on this trade here. So this is one of our long-term plays. We're bullish on Home Depot. In our opinion, we feel like Home Depot is going to close well above 300 at the end of the year. Okay, so that's pretty much it for the weekly trade recap. Again, these are the trades that there are many more trades, but these are some of the trades that I shared with my Trading Masterclass members. We day trade, we swing trade, we trade options, short, medium, and long term. So for the first several hours of each trading day, I am sharing my trades with all my members. Win or lose, doesn't matter. They're going to see all my trades. If you like to trade with us here and trade with the community and the senior members, we've got some really profitable senior members, and learn from just a nice global community that's really supportive and everybody's sharing trade ideas every single day across multiple continents, then check us out at secondskiesforex.com and our Trading Masterclass. That's where I'm sharing my trades. We have a pre-market live stream Monday through Thursday. I'm sharing my live trades. We have webinars and ongoing mentorship with everybody. We have a swing trading channel where we're sharing our swing trades. We're sharing it all. And so if you want to trade with us, then come check us out at the Trading Masterclass. Also of note, at the end of this quarter, we kind of did a poll with our members there. So last year we shared our 2020 performance, all our stats and everything like that, accuracy, most profitable trades. We shared it all. We shared all the data, profit per month and everything like that. We shared all our stats. Our original plan this year was to share our performance again at the end of the year. But then we talked to our members and we talked to some people in the community and we said, hey, would you guys feel better if we shared our performance quarterly? So we are going to share our performance this quarter as well. So stay tuned at the end of March. We'll do a video at the end of March once it's closed. How we did for the quarter. Did we make money? Stay tuned and check out the video to find out. If you like this video, make sure to subscribe to our channel, give it a thumbs up, and let us know in the comments below if you enjoy these kind of weekly trade recaps where I'm kind of showing you my trades, how I'm trading them, and how I'm performing, and if you get trade ideas on how we trade or some potential trade ideas on trades that I'm in, like HT or something like that, let us know if you like these kind of videos in the comments below. With that being said, good luck trading, everybody. Hit the bid, hit the subscribe button, and I'll see you in the green.